This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Very good, thank you. Very busy, but I understand you are as well. Of course, you have been working hard to get your annuals published, haven't you? Which has, of course, happened today. So, I mean, first of all, how do you feel? I mean, it's very difficult to get these accounts all sorted. Of course, it's the first time you're publishing these kind of numbers to the market, which we've all been waiting for. Just give me your initial thoughts.
Yeah, well, it's great to get to this milestone. It's our first full year audited accounts. It's a bit of a weird reporting period because they're actually for 18 months. So they cover a 6-month period before the RTO. But it's a great milestone for us to get to. And it's a good chance just for us to reflect on what we've already achieved this year and what's coming in the near future.
Well, alongside this, you, of course, published a sort of presentation or certainly a PDF, which is very nice. I mean, the first half is explaining about the company and the product and what it's all about. But then you've got a breakdown of the results, which I've never seen a company do before, which is very good and nice to see that very clearly. So a few things that I noted. I mean, you talk about the big clients being, of course, Lancer Shafrangar, the pilot there with Admiral and LB Frostkring, I think is how you say that correctly. But generally, all the numbers are very high up, aren't they? I mean, unit sales up 300%. You've gone from circa 17,000 up to about 40,000. So purely on unit sales, that's a big improvement there.
Mm-hmm. Yeah, that's right. I think the interesting thing, as you've mentioned, is, I mean, recently you and I have talked about a whole raft of contracts and new deals that we've announced. But all of those were post this period and not impacting these financial results at all. So the growth in those numbers were really only driven by those three things above our kind of existing base customers. There was the end of the Lancer Shafrangar pilot, not the rollout. There was the Admiral pilot, and then there was the rollout into LB Frostkring, who are like a mid-sized Danish insurer. Really, those three things have driven that growth. But as you see, it's fast growth across the board. So yeah, you're right. Unit sales up 300%. You can see that filtering through into the registered customer number, which is up to 70,000 now at 75% growth. And that's then impacted the revenue number, which is up 182%, 2.1 million as well. So pretty good headline growth across the board, only driven really by those three things.
Excellent. And when you say registered customers, that means actual end users, does it? Like homeowners? Yeah,
that's right. That's the number of registered customers that we've got on our platform. One interesting thing, Mark, is you can see in these results how we've shifted the pricing strategy recently. So we generate revenue from two different sources. One is from upfront device fees, which are one-off in nature. And the other thing is from ongoing revenues from that registered customer base. So they're revenues from software and service subscriptions and repairs. And we've really taken a deliberate choice to reduce the amount that we're charging for the upfront fees and put more pricing into the ongoing revenue. So that's better for the lifetime value of the customers. It's better for shareholders because that's ultimately going to be the thing that drives the long run cash flow and the valuation of the business. So you can see that in the splits. The ongoing revenue has grown by over 500% and is now half of the revenues that we've generated at £1 million, whereas the device fees have only grown by 86% to just over £1 million. So it's an important shift. It has a deflating effect on the immediate in-year gross margin in the kind of headline revenue number. But I think shareholders will understand that's in the best interest of the long-run valuation of the business.
Well, indeed, because one-off device sales are, by their nature, one-off device sales, whereas you want to be talking about the longer-term cash coming into the business and the growth there. You've got that there. Well, it's roughly 50-50. What split? Would you look for an ideal split or not?
Well, I think, I don't know if we've got an ideal in mind. I think a lot of the new deals that we're doing in the United States, we're 100% onto ongoing fees. And the only reason we didn't do that in the past is because we were worried about the cash profile of that. We didn't want to lose money, but the I've mentioned to you before, we think we find the secret sauce on how to do these deals. We do everything on recurring fees, but we ask our insurance partners to pay in advance for the first year fees for a set amount of units. So the cash profile is still cash positive in the first year, even though it's not in the P&L. So it's kind of a way of kind of acquiring vendor financing to fund the working capital of the business. That seems to be working so far. If we can continue to do that into the future.
Okay. Well, just looking a bit further down onto the gross margin there, that's 33%, and that has increased, quite considerably again from, well, it's more than doubled down, up from sort of 750 to sort of £2 million there. But the actual percentage is lower, isn't it? But I think you're saying it's because of the sort of inflation matters at the moment and the cost of components. Is that right?
Yeah, that's right. So the cash received from customers has grown significantly. The gross margin is a bit lower in these reported results at 33%. And you're right. There's two different reasons for that. One is that deliberate pricing change. So it impacts the in-year reported gross margin, but improves the out years on those individual deals and those individual customers. The other reason is, as everybody else did, we did see some inflationary cost pressure on component costs, the cost of getting the repairs done, that kind of thing. So we have been had some success of passing on those price increases to our customers. But in this period, there was some pricing that we already had locked down that we weren't able to change. So that was also a bit of an impact on the gross margin being a bit lower.
Well, certainly looking back, of course, these accounts are always looking back. It's only good, isn't it, across the board? Like you say, fast growth across the board there. And of course, it's still early days for Ondo, really making strides into different markets and breaking into the US. So the share price, of course, has been doing fairly well recently as well. Perhaps some value there or some fruits of your labour being reflected there in the market cap of the company. There's a section in your presentation here which is about addressable households and sort of signed contracts. I wonder if you can explain that a bit more. Is this the what you have access to, or what's the potential that you could get? Yeah,
that's right, Mark. So we haven't talked about this publicly before, but we thought it'd be a good KPI to publish. So this is if we add up what is, of all the contracts that we've got live in the market right now, what is the total number of households that we can get LeapBot into potentially? So if it's a pilot contract, we're just counting the capped pilot volume. But if it's a rollout contract, we've estimated the addressable number of households within that partner's customer base. So at March 2022, that total household number was about 500,000 households, and we'd already penetrated about 8% of that customer base. If you skip forward to now, we're now over 2.5 million households in that addressable base, and that's because some of the recent wins, most notably, would be the rollout in Lancer Shafrangar, which we announced quite recently, a new 5-year contract to facilitate the rollout across Sweden. So if you look at our current penetration of that addressable base that's under contract, we're back now to 3%. And remember that in that test region with Lancer Shafrangar, we actually got to a 40% penetration. So I think just looking at the scale of that opportunity, how big this business could be if we never signed another contract, it gives you a sense for why there's so much excitement. And I think that's been reflected in some of the share price movements recently, as kind of investors have started to understand that the potential for this business to grow and to grow quickly. And that's of the deals we've already signed. So, and obviously we're planning to sign a lot more. So we'll report on that addressable household number into the future as we sign more deals.
I think that's a very good KPI, and you've explained that very well. You can see massively how that addressable market, as you say, addressable households, put it another way, has grown hugely, and you're only penetrating 3%.
Yeah.
If I was to ask you what you would target, can you give me an answer on that?
Well, we haven't put any forward-looking statements out as a business, but I will mention I do think there's a research note going to be published later this week, which I think will help investors answer some of their questions around, well, looking at this from a few different ways, how big could this business be over what time frame? And also helping investors try to understand what is the lifetime value of one of our customers when we add one. I know with a recurring revenue business, it's quite hard to understand the unit economic profile of a single customer. So I'm hoping that research note will help investors to be able to have a bit more insight into what that might look like. But going back to that penetration of the existing customer base, like I said, if we hadn't have added the Lancer Schaffengar as a pilot, as a rollout partner, I think we'd have already been up to a 15% penetration of the existing customer base. Like I said, in the LF trial, we already got up to a 40% penetration within the test region. So, you can do your own maths once you understand that lifetime value of a customer. You can do your own maths within that existing customer base and see where how big the business could be if we didn't sign another contract.
Yes, well, I'm sure people will be doing little calculations in their own time. At some point, I hope the company will put out some forward-looking statements, KPIs, objectives, and we can. I know it's something that you will hopefully do at some point. I know we can maybe get into some of the numbers there. We can really start to measure the growth and success on a real data point basis.
Yeah.
But looking at that addressable market there, and obviously you want to increase it. Any concerns with manufacturing capacity here and rolling out and scaling up the business?
It's a question we often get asked. So we've got some headroom in manufacturing capacity in the facilities that we've got here in the UK. One thing that you can see in the accounts actually is we've actually deliberately built up £400,000 worth of inventory in anticipation of some of the deals that we've got going on in the first half of this year. So that gives us that takes a little bit of pressure off of maxing out the factory capacity. But with enough lead time, our contract manufacturing partner can open up additional lines, whether it be in the same facility or elsewhere around the world. So it's not that difficult for us to increase the capacity as we need to.
So no concerns there?
No.
Okay, perfect. And what about current cash at the moment, Craig? I understand you've had a fair number of warrants exercised from the last placing.
Yeah, that was the other new news as we published the accounts this morning. So the cash position at the end of the reported period was 0.4 million of cash and cash equivalents. Since then, we've raised £1.3 million. So £800,000 of that was from the placing, Mark, that you're familiar with. But what investors didn't know until this morning is we've already raised another £500,000 just in the last few weeks from warrants getting exercised. Now, interestingly enough, that still leaves a total number of warrants worth £6.8 million in shareholders' hands, an average exercise price of 22 pence. So that's also a very useful kind of future source of capital as those warrants continue to get exercised.
Okay. Well, thank you very much for going through that with me, Craig. I would encourage people to look at that presentation that the company will be putting out, because it does explain things that very clearly there. If I was to ask you, just thinking about going for the rest of the year, we're just over halfway through the year, certain things you'd like to see achieved. You want to break more into the United States, you want to find more partnerships or get more contract wins, or all of the above?
Yeah, exactly that. I mean, myself, the management team, the board are brimming with excitement at the moment about the opportunity that we've got ahead. In the near term, what we're going to achieve in the next 3, 6, 12 months. I mean, the reason why I remain excited is we've got a great opportunity ahead of us to create a sizable British technology company with a patented technology that was invented here in the UK, a product that's made in Britain, listed in London. And the opportunity ahead is massive. The target addressable market for our product is absolutely huge. And although the growth percentages are very impressive today, we're absolutely in the foothills of this great journey. And I think the reason why investors have been so excited is it's unusual to be able to invest in this type of a company at this early stage on a public market. So we're really excited. And as you say, it's definitely about more traction in the United States. We remain really excited about that opportunity there. That's not baked into the share price, I wouldn't imagine. So the opportunity is so big. I think if we can show a few more signs, build on these first steps to get some more traction in the US, I think that's a really exciting story. And then, more contract wins, obviously, in our existing markets in in the UK and in Scandinavia as well.
Okay, and of course you've got what you're doing with the water companies as well, which one would only guess would increase as well.
Yeah, exactly. Yeah, it's also a really interesting new route to market on the back of the results we announced recently with Portsmouth Water.
Portsmouth Water, excellent. Well, thank you very much, Craig Foster, the CEO of Ondo InsurTech, for your time today.
Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.